Good afternoon. George Cavaligos for HFT Bonds. Well, I guess you can call this a Pyrrhic victory. Bonds were down more than, 2 points this morning, and they're right now, with getting close to the equity close, they're only down half a point at this point. But it's also not a great victory because we got all the way back to unchanged, and we're actually a little positive on the day right around the pit close time, and then gave it up and couldn't close positive or even unchanged today. So we're not out of the woods yet, by far. But with the auction starting tomorrow with the 2-year, I think the dealers had to, come in and provide some kind of a bottom or a base here. Otherwise, these, 2-year, 5-year, and 7-year auctions that start tomorrow could have turned into a disaster, and they still might. Like I said, we're not out of the woods yet. But we did have a nice bounce today. Probably chased a lot of shorts out. I want to point something out that I highlighted in my morning email this morning. A bit of a heads up, I guess. With the market down big on Friday, open interest was down too. It was down, 11,000? Hold on. It was down a little more than 11,000 in the notes, and it was down almost 7,000 in the bonds, with the market making new lows. Typically what you want to see is the market making new lows and open interest increasing, signifying new shorts coming in, not open interest decreasing, signifying shorts covering. I think that set the table for today's reversal. And I facetiously said in the chat room, it might be a good day for the PPT to pull a stick save on these sell-offs and come in and give us some kind of a rebound. Well, we got the rebound. Unfortunately, the market isn't healthy enough to sustain that rebound. And like I said, we're down half a point right now, kind of groping around a little bit for some support levels here. And I'm going to throw up some support levels you might want to watch tonight. I don't think I'll be watching because the Stanley Cup game's on tonight. I'll be watching that. I don't think I'll be trading the markets tonight. I'll wait till tomorrow morning when we get the better volume and I get better signals with my short-term entries and exits than I do in the overnight session. For a while there, we were doing okay in the overnight session, and then all of a sudden those wheels started falling off, and I gave up too much on the overnight trade and have stopped doing it. Wait till the day. We got enough volatility intraday to give us, plenty of trading opportunities. So we'll wait till tomorrow, but watch some support levels as the market drifts off here. On the bonds, we're poking around 134.15 right now. I have some minor support right in this whole 134.15 to 12 area. I'd rather see a move back down towards that 134 even to 133.31 area that was sort of a stumbling block on the way up this morning. I think that's your better support level. Market might give you better signals down around that level. Keep an eye on that. Roughly, what is that, 125.0809 on the 10-year and 125.18 are the two support levels to watch on the 10-year side that sort of correlate with the bond levels that I just threw out. Tomorrow's 2-year auction, Fed buyback, pretty hefty level of buybacks every day this week. I think it's the biggest week for the month of June for the buybacks. They are still buying. I think that helped propel some of this sort of early afternoon rally that we saw today, late morning, early afternoon rally, and again, I think we could see some of that tomorrow. We also start getting a lot of economic data tomorrow, I think starting off with durable goods orders. The Dallas Fed number was pretty strong today. The market pretty much ignored that, and I think we could probably see some kind of move on the data tomorrow. I just don't know if it's going to be an unequivocal move. I'm sure the auctions are going to be the key. We've got to see how the demand shows up for these auctions. That's going to be the key, especially the 5-year and the 7-year. That whole 5-year to 10-year area of the curve has been really the bloodbath area, the whole yield curve, with the mortgage problems and all these other problems we saw in the ETF market, especially. So that's going to be the key. Upside, I would have loved to have seen the markets get back above Friday's settlements, and we got there briefly, but we just couldn't hold it there. We need to get above some old highs and stay there for more than a heartbeat is what I'm trying to say, and we just haven't done it yet. I think we could poke around, let's say, this morning's lows, that 124 even area to 126 even area for a while here. and let the market sort of consolidate some of this sell-off that we've seen. And if we can get over that 126, even area in the 10-year and stay there for more than a heartbeat, maybe we can say we have some kind of a low in place, at least through these auctions. I'm sure the dealers are going to try and stabilize this thing to the best of their ability. They've been on the wrong side of this market since the bonds were auctioned off a couple weeks ago, and really since the unemployment number back in May. They've been on the wrong side and just getting smoked, like some of us were back early in May on the wrong side of this trade. Okay, what else? I think that's it. Go Blackhawks! I'll see you guys tomorrow morning. Early, maybe not so bright.